The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Good morning, folks. Half of the Money Masters here. It is a marvelous Monday, and Tom is out buying real estate. You got to love it. Folks, if you haven't had a chance to check out the white paper that Tom did, the Florida bull market and real estate, it's on the homepage under breaking news on the TFNN.com website. Go check that out over on the right-hand side. You will see the Tiger Real Estate Opportunity Fund. Perhaps you are a qualified investor and you'd want to explore things a little bit further out there. Maybe you're interested in buying low and selling high in real estate. That is, there are some opportunities specifically in certain pockets around the country, and no question one of those pockets is here in the Pinellas Suncoast area here of Tampa. I hope everybody out there had a great Thanksgiving and holiday. Hope everybody was safe out there. There certainly was some fantastic football out there, just really great football. I think I caught pretty much all of the games from Wednesday evening forward out there. Was a little under the weather. Did manage to squeak in one game of golf on Thanksgiving Day morning like I have for, 20 some odd, maybe 30 years now out there. Our call-in number is always 877-927-6648. The Dow trading off 70 points right now, giving back 70 points of the 170-point gain that it had on Friday. The S&P off 6 points right now. The composite off 3.5. The small caps off 1. Microsoft is down 38 cents. Apple, though, leading the charge to the upside, up 1 2/10% up there, up $7 and change. 3D Systems right behind them, up $4.50. That's up 6%. Deckers Outdoor, we'll take a look at that stock chart. That is up 7%. 3D Systems is up $2.50. And Stratasys, which is also another 3D entity, that's the one that's up $4.50. And 3D Systems, Triple D out there, $2, up $2.50 to the downside. Google leading things to the downside, off $5. Randgold down $3. Illumina Inc. off couple bucks. Whole Paycheck Market, Whole Foods Market down $2 and change out there. Ashland Inc. off $2 and change as well. You can give us a call at 877-927-6648. Would be happy to take a look at any stock chart that you want out there. You know, Santa Claus may have, I know he showed up on Thanksgiving Day in all of the parades out there, and it's possible that the Santa Claus rally here has started. Now, we are coming into a full moon lunar eclipse phase here on Wednesday, as well as the moon being at apogee. That is when the moon is also furthest away from us. So we got a triple whammy out there with the markets moving up on light volume. That is most likely setting back probably a 4-day, minimum of a 4-day pullback in the markets, of course. If the markets can motor through that, that would be another huge signal. There are candle signals out here that say that a very important low is in. We're taking a look at the S&P 500 right now. It's trading out at 1402. One of the things that you can take a look at on this stock chart here, if you are watching us on Tiger TV, maybe you're just listening in on the radio, perhaps your mobile device, and if so, Channel 10 is the channel on Tiger TV that will show the archive of this show. That way you'll see the chart out here. We're taking a look at the daily chart of the S&P 500. The daily chart shows that on Friday you got price back inside the rising trend line coming off of the October 4th low. Once you get back, and it just barely got inside, but it was enough to say that it actually wants higher price. It wants to move up into the November 6th level. That November 6th level, the high out there being 1433. In fact, if you just take, let's just do this here. Let's just take kind of an ultra short-term trend line. We'll just come off of the October 18th level to the high here on the 6th of November. That's that little black diagonal line now to the downside. What you can see here is price now broke through that area. This morning came back and tested it. I don't think that price to the downside may close lower today, but I don't believe that price to the downside. I don't think we've seen enough movement to the upside in the markets out here. Now, The candle configuration on the S&P 500 that we're talking about, very important candle configurations, a 4-candle reversal signal, a 4-candle morning star pattern from November 14th, November 15th, 16th, and the 19th out here. It's the same candle formation that we had coming in the June 4th lows out there. And June 4th, it's right here. And what we had last year at this time, on this day, not the exact day, but right after Thanksgiving, you had this November 25th reversal. You had you had the traditional morning star reversal candle formation that came in here. So at each of these bottom lows out here, the November 25th one, the June 4th one, and June 4th, and then the lows that just came in here recently in November, all have got the same candle formation out there. What does that say? It says if those lows are taken out, that would be a serious thing out there because those are significant reversal patterns out in the marketplace. What does that say? That the S&P should move to it. It completed a 1 to 1.272 A to B equals CD down. I think it just simply wants to at least get back and provide us with information as the swing point would be tested, which is the November 6th level out at that 1433 range. It's possible that you could get some information as it tests the bottom there at 1417.26, but it does look like these markets want to move higher. Let's go take a look at the other indexes as well. In the morning, I start off taking a look at the futures market before the market is open just to get an idea of where things are headed. Let's go take a look at the Russell 2000. The Russell 2000 trading out down right now about $1.45. Russell 2000 almost the strongest index to the upside here this morning, even though it's trading off just $1.45. You can see really just having an inside day here. What the Russell wants to do, let's go take a look at from the swing point high. Let's get rid of some of the lines out here, make it a little bit easier for you first. So let's clean up some of the mess out here. The Russell had pulled back to the 0.786 retracement level. That was off of the June 4th level. Now we're going to get rid of those lines. We're going to take a look at the retracement thus far coming off of the September 14th high down to the low that was put in on November 16th out there. You can see on Friday, the Russell 2000 getting above the 0.382 retracement level, not even taking a break out there. I suppose you could call this morning a break, not much of a break out there. That says the Russell 2000 wants to go and tag that trend line, the trend line that takes you back to the October 4th level. That would also say most likely you'd see the Russell come and try to test the swing point from November 2nd. Now, the Russell 2000 has been weak out there, so we're going to get some information released to us as the price moves into the November 2nd candle. The low there is 814.34. That's one area you're going to want to be paying attention to and write that down on your pad of paper. The 830.55, that is the high of that session. I suspect that is where the Russell wants to travel to. Let's go take a look at the Dow. As we take a look at the Dow Jones right now, down off $67.67. So I like that. 6 and plus 7 is 13. That's my lucky number out there. So 67.67. You get the lucky number twice. I suppose that means I should go buy a lottery ticket. You know, the only way to win that game is you got to buy one, and I seldom buy a lottery ticket. But I believe Powerball is up to about $450 million out there, so it might be worth at least playing. You know, I think if a number 67 were up there, I'd go ahead and play that. But let's go take a look at the Dow trading out at 12,938. You did get a close above 13,000 on Friday. That close was $13,009.68 out here. Again, very strong reversal pattern out here that we're taking a look at off of the lows from November 16th. This candle pattern is a leading indicator out here. What we can see here, I'm going to go ahead and get rid of the retracement that the Dow did, was a little over 0.618 off of the June 4th lows. We're going to get rid of that set of lines. We're going to go take a look at the retracement now off of the high in the Dow on October 5th. That level, 13,661 and a little bit of change down to the low put in on November 16th. You can see the Dow getting up above the 0.382 level, doing it with conviction on Friday. Shortened trading session, conviction from a candlestick. Not certainly conviction when you take a look at the volume behind the move. So far this morning, coming back and testing that area. The Dow wants to move up to the trend line, wants to move up to the 618 level. That level is 13,200 and change. More likely, the Dow wants to go test the swing point of November 6th, 13,290.75. Let's go round this thing off here. What did we not take a look at? We took a look at the S&P, the Dow, and the Russell. Let's go take a look at the SOX, actually. Why the SOX? Because the SOX has been, Intel. Let's see, right now, Intel is up 9 pennies out there. I believe Intel is the number one weighting inside the Philadelphia Semiconductor. But we did get a nice hammer candle. It was a type 4 hammer candle of 1 through 4, 4 being the weakest out there. Still a nice hammer candle as the lows were made here on October the 16th out there. You can see you had a nice gap up on the following trading session on the 19th. So as we take a look at the Philadelphia Semiconductor Index out here, let's go take a look at the retracement level done just simply off the most recent swing point, which would be November 6th, down to the low of the hammer candle. You'll see that the 0.618 level has been tagged here. It was tagged on Friday, tagged again this morning. That level was 371.34. The SOX wants to move up to 377.20. More likely, what the SOX really wants to do is go test the November 6th swing point. That low, 378.44. The high, 384.66 out there. To wrap things up, let's actually go take a look at the NDX. Let's go see what the NDX is doing. You've got Apple trading up $5 and change here this morning. The NDX making a 1 to 1.618, A to B equals CD. Now let's go take a look at what the NDX really wants to do is get up and try to make its way all the way to that trend line. That is quite a stretch, but really if you just take a look at swing points out there, that would be nothing more than getting back into the swing point from November 7th. Perhaps it's a swing point from November 2nd, really. That high is 2701.91. Now, let's go ahead and get rid of some of the data out here, make it a little bit easier for you to follow along. What we can see here is where it's going to run into resistance is right here where you had the NDX gap down, did it with conviction, so did it with volume. That level out here, which it has not done thus far, is the 2651.26 level. On Friday, you got up to 2640.39. So that test is not done. Having an inside day, you've got Apple trading up. The NDX wants to make a run. If you get a close above 2651.26, which I suspect you will, that says that you will likely see a test of the high from November 2nd out there, the 2701.91 level. Let's see here. Got a request to go take a look at SN. Let's see here, SNSS. Let's go take a look at that. Let me see what SNSS is first. SNSS. And then we'll go ahead and we'll pull it up on the screen. That is coming from our Tiger's Den, folks. And if you haven't had a chance to check out the Tiger's Den, go to the homepage at tfnn.com. You can test drive that for free. Also, while you're over there, there is a survey that we are doing here at TFNN. We want to make sure that we are providing you the best service possible, the best services possible as well. And the easiest way for us to do that is to get some more information about what it is that we do good, what we don't do well, what it is that we can do better for you. We'll give you 25 Tiger dollars if you go over there and you test that out. We'll come back. We'll take a look at Sunesis Pharmaceuticals, trading out at $4.98 right now. 877-927-6648. Dow's off 64. S&P's off 6. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow off 72 points right now. S&P off 7. And before we went to break, we said we'd come back and take a look at Sunesis Pharmaceuticals. They are a cancer biotech out there. SNSS is the ticker symbol, trading out at $4.99. Of course, if you pull this chart back at one time, it traded up as much as it looks like about $45, $44.40. Of course, it's traded as low as 96 cents back in the 2009 timeframe out here. So not a lot of folks having fun at this party. Now, this did have quite a breakout wide price, but we're looking at the weekly chart. And if you take a look at this, it does have some volume up here on we talk about wide price spread, $2.34 up to $14.58, December 11, 2009, but it didn't hold price. It's a very dangerous thing out there. When you take a look at the volume, you had 20 million shares traded hands out there. So this is a dangerous stock chart out here because it did not hold price at all. In fact, it moved all the way down to where it had broken out, below where it had broken out back in October of 2011, down at the dollar mark out here. Now, if we take a look at it, we come to more recent time frame. Let's take a look at the most recent breakout on the weekly chart. You're looking at September 21st. Breaks out with 8.3 million shares. Gaps up. Now, it's gapping up from the prior week. You can see the close on September 14, 2012, 1.8 million shares. Now, as price moves back into it, came down with 3.5 million shares. So that 3.5 going against 8.3, really, the breakout week, so not too bad. The area held You got a close below the breakout day or the breakout week of September 14th, which had 1.8 million shares. You got to close below it with 2.4 million shares on November 16th. Against your benchmark really still is the week of September 21st, but you don't like seeing it close back inside there. So, what does this set up here? Well, as long as this thing is trading inside the September 21st area, you're okay. The high there is 589. That's probably where it's headed to on a weekly chart. Let's go take a look at this on a daily chart, see what else is out here. Daily chart, you can see here the nasty behavior of this equity. Take a look at this. You go back to December 11, 2009. Here's where we're taking a look at that price spread goes from all the way up to $14.58. That's in December of 2009. Again, it pulled back to a dollar or less in October of 2011. So on the daily stock chart, what we can see here, it's some wide price spread, but wide volume spread here on September 11th, 2012, but it sold off. Did not hold its gains out there. Now, the equity did move back into that area, and it came back in there on November 7, 2012 with light volume, 1 million shares, 893, going against 8.8 million shares out here. But no real follow-through to the upside, even on this move up here. Much like the markets, and that's a dangerous thing when there's no follow-through, no conviction from a volume standpoint. This does set up that it could go and test. I would say most likely it's going to be this high volume day of October 9th. So if you're in this stock, 515, you want to see it close inside there with more than 1.9 million shares. If it doesn't, it's a very volatile stock and most likely will come all the way back down to its most recent lows out here in the $3.70 area. That was on Sunesis Pharmaceuticals. I have a request to go take a look at natural gas out of the den as well. So let's go take a look. Natural gas selling off quite a bit here. Now, natural gas, seasonality-wise, it's getting pretty cold. I don't know about you folks and where you live, but in Florida, it's been a little colder than normal. Now, cold for us is mornings when they're in the 40s and 50s. For me, anything below 70 is cold, quite frankly. So 40s and 50s, you can bet it's parka time. And of course, those folks up in the north are laughing at me. But I used to be from the north, and the blood has just thinned out a bit. And, of course, days here are like in the 70s, so that's more my style of weather. So if we do take a look at natural gas here, it's in its cycle where it wants higher price. So I don't know what the request is as far as looking for an entry point. I would be looking to buy natural gas on any nice pullbacks out here. Natural gas could pull back. Let's just take a look at its most recent set of swing points out here from the low to the high. That's going to be coming off of the low here from November 12th up to the high that was put in on Friday, November 23rd. You can see it's come back to the 0.382 level. Really looks like natural gas should come back and test the swing point of November 12th out there. Maybe that high of $3.59. If you get that, if you see that, and you're coming back with the right volume, I would take a look at getting in on this trade out here. The one of the trades might be UNG. That is the ETF for natural gas. You have to pay attention to the contract as well. You can see UNG looks like it gapped down this morning. But again, to me, this is more like a buying opportunity. I'm trying to refresh the chart here. More of a buying opportunity. I would not be bugging out if you were in this trade here. Of course, it depends when you entered it. 877-927-6648. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. The Dow off 65 points right now. S&P down 6. And let's go back to natural gas. I've got the continuous contract here on my screen, trading out at $3.74. Now, what you're taking a look at is you're taking a look at really a nice rising price channel. So natural gas certainly off of the lows back in April 20th, 2012, out at $1.90, and this thing has been traveling up towards the upper portion of its range out here, even as it got into the overbought condition. Did that back in October 2012, did it again. Did it in the early part, did it in the middle part of October out there. And you can see really still moving higher as it was working off of that overbought area. So I would say, again, this is something that you would be looking to buy any pullbacks. If you're in this trade, this would be I think this is a good trade to be in until the seasonality of natural gas is over. I believe that is March. Don't take my word for it. Go to seasonalcharts.com. I believe they've got the seasonality factor out there as well. But and you can see the same chart pattern, quite frankly, inside the ETF, the UNG out here. So now as the UNG, you can see the very similar chart patterns out there, but really you're going to peg the trade off of UNG. And speaking of peg, for our man Tom in Paramus, New Jersey, we're going to go take a look at PEG for him. He's been looking to get into this trade here. PEG is the public service enterprise group out here. And the reason why he's interested in this today is because you've got a nice little bullish candle out here. The low, 29.20. The high, 29.82. It's trading at 29. $1.75 right now. You got a little bit of a bullish candle out here, bullish engulfing candle. Now you can see here, this has gotten into an oversold condition. So, it has to work its way off. I would buy this on higher price. I would not buy this here right now. I would be paying attention to the bullish engulfing candle, but I would be concerned with this equity here. I would want to see it get above and close above. It's like been in this little sideways consolidation box. Now, not much of a consolidation because you're only going back to November 12th out here, so you're just taking a look at the last 8 trading days or something like that. But I would be paying, so it's oversold. You would expect a bounce here. Volume-wise today, Tom, 686,000 shares out there. So it's not a lot of conviction out here. I would want to consider if it were me, I would want to see this prove itself. I would like to see it get above the November 9th date, at least above the low, well, I'd say above the high of November 9th. I'm sorry, November 9th, the low there, 29.88. It's at 29.81 right now. I'd like to see it close at least inside that area, and I'd like to see more likely a second day of conviction behind it. That is on PEG. You might be paying higher price, but I would let this one prove itself to you. Now, let's see here. We've got Deke in Clearwater on the line. Deke, thanks for calling. Thanks for holding. How are you today?
Yeah, pretty good, Steve. How are you?
I have been better. The weather's a little under the weather here. Got a little bug that's trying to get the better of me, but you can't keep a good man down. That's what I say.
Yeah, that's what they say.
Yeah. So we're going to see if I'm a good man or not. If I show up tomorrow, I'm a good man. If not, oh well, the court is out.
Yeah.
You want to take a look at ANF. How was your Thanksgiving, by the way?
Fattening.
Fattening. Okay, that's good. You consume like an average of 4,000 calories like everybody else. No, I know you, Deke. Deke, did you even eat much on Thanksgiving?
I eat too much. I have to walk extra for a couple of days after.
Okay, all right, good. All right. You want to take a look at Abercrombie and Fitch. Tell me what you're doing and how I can help you.
It looks to me like, hold on, honey. Talking to my little pup here. She wants to get in the mix.
Oh, that's okay. That's good. What's your pup's name?
Name is Navia.
Oh, that's great. Oh, good. Now, what kind of dog do you have?
She's a King Charles Spaniel.
Ah, very cool. Have you always had spaniels in your, as a kid, or is this your first one, or?
This is my second one. We had a boy. We had him for 10 years. We lost him a couple years back.
Okay.
His name was Heaven, so we named her Navia, which is just the opposite of.
Oh, that's really cool. That's great. Hey, thanks for sharing that.
You're welcome.
So we're taking a look at Abercrombie & Fitch, having a nice morning here, gapped up as well back on November the 14th, of course, and it gapped up with volume, 35 million shares. Are you in this? Looking to get in it? Looking to short it?
Looking to short it here at the top of this falling window.
Yeah.
Rolled over.
Yeah, so as we take a look at that, what Deke is looking at, folks, he's going back to May 15th. Let's draw the line across here. And the problem is that window has now been repaired. And so what you really wanted to see, now we'll take a look at the top of it. What you really wanted to see, now the day's not over. So what you would really want to see today, in order for that window to hold, is you would want to see it close back below $44.88, which is possible because it's trading, off of its highs. It's trading at the session lows. If it trades back below that, and certainly if it does it on less than 3.5 million shares, that would be your signal. The problem is you've done 2 million shares in an hour and 9 minutes of trading. 2 million shares in an hour and 9 minutes of trading. The problem here on shorting this equity is that you've got some really good support here at the rising window. So you called it right with regard to the falling window. The problem is the low of November the 14th, which is $38.86 with 35 million shares. That, although it's not tested, that becomes a real strong support area. So I don't know if the reward to risk is going to really pay off for you. You would have preferred to have seen this low from November 14th. More likely the same type of low that you saw on August 2nd with 16 million shares to the downside. So Abercrombie & Fitch is not looking, to me, like a great reward to risk short candidate out there. And that's all because of the trading session, Deke, on November the 14th out there. So that's where I would suggest that you be a little cautious, okay?
Yeah, but if she gets back inside of that window, you think she could trickle back down to the close of the 14th? The 14th? with the 35 mil?
Well, I think the high is, $42. You're going to find out real quickly. And, whether it will fill the gap, it would need some really bad sales information. In Abercrombie and Fitch, I think has been one of the stronger retail performers out there. At least that's the buzz in the media. I know I don't shop at the store. I know, my younger kids, they used to. They don't anymore. And but this window here, and if it closes where it is, if it closes above 44.88, that window's been repaired, and that no longer is really an area of resistance anymore. And that's as Abercrombie and Fitch could actually move up to the swing point high of May 2nd. This is a better short at a higher level.
All right.
Than where it is right now.
One last question. Did Cat bounce on Apple? Did it do it today?
Let's go take a look at it. So we take a look at Apple. Apple is trading out right now at 578.85. So let's go take a look at it. Yeah, close enough. The actual number here would have been 581.89. It got up to 579.74. So good enough. But I suspect Apple is going to Apple's going to give you a big apple. Did you have any apple pie over Thanksgiving?
Yes, I did.
You did? Okay. Well, I think Apple is going to serve up some more apple pie, and it's going to actually move up to a higher price, maybe into the $6.29 level out there. Kind of hard to believe, but we'll just, volume so far today is not too bad in Apple. It's done 6.3 million shares in an hour of trading. That's actually pretty good volume for behind the move out here. So it's not giving a reversal signal, at least not one that I've seen here yet. Okay?
All right, Steve. Tell me the time for me.
You will do, and thanks for calling. Always good to hear your voice.
Okay, man. Thanks.
All right. Let's go to John in Sarasota. John, how was your Thanksgiving holiday?
Very good, thank you, Steve.
Did you spend it on a boat somewhere?
I would have liked to have spent it on a boat somewhere, but I did.
Have you spent Thanksgiving on a boat somewhere before? You must have.
Yeah, when I was sailing the Bahamas.
Oh, good. Now, would you have Thanksgiving meal, or would you just jump out, into the water and spear? What's your favorite fish that you would spear out there? Would you spear fish?
No. I was too afraid of that disease from the fish eating the fish that eat the coral.
Oh, really? Okay. So
because they had airlifted someone out of there who had eaten the fish.
Okay.
And so that left me with permanent fixation. Don't eat the fish that eat the fish. And I don't know the difference between the different kinds of fish.
Oh, okay. All right. Okay. So does that mean you don't eat fish at all?
Oh, no. I eat lots of fish, but you have to eat the fish that people know are the good ones.
Okay. All right. Good. Well, geez, I haven't been discriminate on my fish eating, so hopefully so far, so good out there. How was your Thanksgiving? Good?
Good.
Oh, that's great. You wanted to take a look at YCS, which is the ultra short for the yen out there. So tell me what you're doing. Are you in the trade? Are you?
I haven't made a decision as which way to go. Now, there's the YCL, but it has such low volume.
Okay.
And there's the YCS.
Okay.
That's why I'm calling you. I need some help.
Okay, good. So do I. I'm trying not to cough here in your ear out there. So we take a look at YCS. It is one of the ProShares ultra short. 100,000 shares. So even this is not necessarily the most liquid. 400,000 shares on the 21st out there. Now in the yen here, what I would be looking for, more of the long trade than the short trade on the yen. And the reason is that means that you would be waiting for a pullback. So I would be looking to go long the yen as it makes if it will make a 0.618 retracement, which would take the yen all the way back to the level of November 2nd, $80.67 out there. Would be, your target. Now, the problem, as you know, the problem with the ETFs out here that are currency related is that, you're trading these basically between 9:30 and 4 o'clock in the afternoon, yet the currency is trading, all hours. And when you take a look at the yen, it's trading at the most important hours, not that now is not an important hour, but when the, when the Asian markets are opening up out there. So you can get some big moves overnight out there. That being said, the yen here wants to get weaker. And when we take a look at the A to B equals CD pattern, what it did, John, was it completed a 1-to-1 A to B equals CD. So I'm going to get rid of some of the lines here on my chart because I know you're watching us on Tiger TV. So the A point on the Japanese yen was the low from September 14th. That low was $77.12 out there. The B point is where I suspect it's going to pull back to. That's the November 2nd high of $80.65. Now, if we just simply measure the retracement from A to B to see what that B to C leg is, see how it was only a 0.382 retracement? That, number one, John, is giving you the signal that it wants to do more than a 1-to-1 A to B equals CD. So I'm going to get rid of the retracement there. Number two, the leg, the explosion off of the C point, which really took place on November 14th, that's also telling us, and prices traveling along the inside left-hand path, that's telling me that the yen actually wants to get weaker against the U.S. dollar. So it says to me the yen wants to get up to $83.58. Now, the nice thing here is that it's pulling back. And also, if I put up the daily chart out here, the daily chart is up. What the yen also did was it got into what will be called extreme overbought territory. It did that on November 22nd. So that also, says that it wants to at least pull back and work that off. It may only be a sideways move. Right now, it looks like it wants to retrace, maybe get back to the November 2nd level. The other spot where it could pull back to is just simply that is the 0.382. That is the dead cat bounce. That's where I would be looking to go long, and I suppose it would be the YCL. Is that what you said it was, YCL?
Yeah, but is there anything else out there that anybody knows about you can trade? That's low. You're exactly right there. You don't want to. Good point. You do not want to trade this because you won't be able to get out of it if you need to. I tell you what, FXY is what someone in the den is saying. So thank you to Joe D in the den out here. So that's the Japanese yen currency trade. So let's go pull up the FXY out here. I have not traded the FXY, but let's go take a look at this. The FXY has more volume. You've got a couple 100,000 shares, so you're more liquid here. But the FXY looks like it is also the short out here. Do me a favor. I'll scope it out for you, John. Send me an email just as a quick reminder, and I'll see if I can locate something for you. But I would be looking at not shorting the yen. I would be looking at going long the yen. There's too much strength, and what I'm saying is too much strength in the weakening of the yen out here, in my opinion, as far as chart patterns are concerned. Okay. I can do that. Thank you.
Send me an email. I appreciate it, and happy holidays to you.
Thanks, and same to you, Steve.
Okay, you bet. We've got the Dow off 74 points here right now. Let's go take a look at some of these. We didn't take a look at the 3D companies here that are certainly moving. Maybe 3D printers are what is the buzz of the holiday season. I don't know. I haven't actually seen one work to, live in person out there. But the 3D printers, SSYS, that is Stratasys Inc., having a strong day out here, up 7%, taking on a swing point. We'll go see if it's doing it with volume when we get back. 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow off 74 points right now. Really not so bad, considering it was up 170 points on Friday. S&P is off 7 right now. Composite off 4. Small caps down about $1.50. We were talking about Stratasys, ticker symbol SSYS. I've got the weekly chart up on the screen here. You know, we were talking to John about the Japanese yen. And so, although in this case here on the weekly chart it didn't do a 0.382 retracement, you want to be paying attention to that C to D leg. Most important leg in an A to B equals CD pattern. The reason is because the market does 75% of the work for you. You need to become an expert of that C to D leg. And if we take a look at the weekly chart of Stratasys, it is moving into a new strata system. It wants to move up to $79.19. That's its next stop. I suspect it actually wants higher price. It's trading up right now 7.6% out at $76.16. In fact, above the 1 to 1.272 level would be 1 to 1.618. That would be $95.62. Looks to me like that's where it wants to move up to. But one thing at a time, if we do take a look at the B point of an A to B equals CD up, the B point on the weekly chart is April 29th, 2.4 million shares. Got up over it with wide price spread with 3.5 million shares. So it went over with volume and went over with wide price spread. You can see price here moving along the inside of that C to D leg. It says that it wants to move higher out there. Let's go take a look at triple D, 3D systems out there. That is also moving higher, DDD. And so I would like to see one of these systems actually work. I don't know. I don't think they sell them in places
like Best Buy or folks like that. If we take a look at 3D Systems on the daily chart here, moving up with volume this morning, 1.4 million shares going against a swing point that only has 2.1 million shares. So it's got the juice. It's 46.92 is a swing point that needs to close above. If we take a look at this is really a nice looking chart here. Most recently broke out. It's got a couple different breakouts. One was on October 25th, 4.8 million shares. The low of the breakout was October 24th, or the high of that breakout, I should say, is $36. Never made it back to that level. As low as it got was on November 16th. Got down to a low of 36.53, 1.9 million shares going against the breakout of 4.8 million shares. Also coming into this high volume bar from August the 1st with 5 million shares out there. 3D Systems wants higher price as well out there as it tries to close above $46.92. That's the November 9th swing point high out there. Now let's go take a look here before we move into the next show. Let me see what is moving biggest to the downside. Let's just take a look at Whole Foods markets. WFM is the ticker symbol there, WFM. See what Whole Foods market is trading down here this morning. No real volume of significance to the downside. 630,000 shares as it is trading out at 92.57. This does have a high volume high out here. It looks like Whole Foods markets really trading inside a kind of a sideways range. Whole Foods market got up to the area where it last broke down on Friday. So that was the breakdown was November 7th. The low there was $95.23, 3.7 million shares. As it moved up into that area on Friday, did it on 1/3 of the shares, 1.1 million shares. Trading off today, 631,000 shares. So it does have a little bit of juice to the downside. That says that the Whole Foods market wants to trade back to the swing point of November 14th out in the $87 range. Stay tuned for Basil Chapman, folks. Thanks so much for being here with me, putting up with my hacking from time to time. I promise you, I'm going to go to bed in a few minutes, drinking lots of juice, lots of water, trying to get some rest out there. I look forward to seeing you tomorrow. Have a great Monday, folks, and look forward to seeing you soon. Bye-bye now.